Hey guys, how you doing? This is Tevin from Simple Forex Options. It's an honor to make another video for you guys, and of course, I love making videos for y'all so I can give you guys stuff that y'all can actually use, hold on to, things that's actually useful in trading. I know from experience that from videos and stuff that I follow from traders, a lot of their stuff wasn't sometimes quality stuff. And when I post my videos, I kind of try to take angles and use things that people really just don't think about and they kind of overlook in trading. So that's kind of my aim today to kind of give you some stuff that you guys can use. Now, the first thing we're going to be talking about, one thing I kind of want to mention a couple things. First thing is this upcoming week for March, I think it's going to be March 25th for this whole upcoming week. The whole week is going to be free. Usually the fifth weeks of every month, I mean, the fifth weeks in a year, I usually make them free sometimes. Instead of asking people or having people pay an extra $5, I just usually give an incentive and make the week free. And I'm actually glad that it's this month because it gives us a little bit more time to kind of get some wiggle room for profits and stuff like that. And then also too, if a person wanted to try the signals out, they won't have to pay anything. They could just come in, just shoot me a message, try it out and message me. Now, if you come in on the last day, I'm not going to add you in, mainly because that's just kind of meaningless. So, let me pull up my calendar real quick. Yeah, the week is the free week actually because we're going to start on Monday. We go all the way to Thursday, and we trade from 1 to 5 p.m. Eastern Standard Time. So, I would suggest that if you want to get in for the free week, that you start messaging me this Friday, which means March 24th, and the free week is gonna end on March 30th, which is Thursday. So if you want, you can have 4 solid days of free signals, and I think it'd be able to work out for you, get you some profit. There's a reason why we don't trade on Fridays, as mainly because it's extremely volatile and it's extremely unpredictable, and also the session that we trade in Friday ends early, so we won't really be able to dip fully into that session. But like I said, I'm sorry. I said 1 p.m. to 5 p.m., but it's really 12 p.m. to 5 p.m. And then also too, occasionally I've been going to from 6 to 9 p.m. To see if we get some extra opportunities. Also, another thing I wanted to mention, we have actually switched back to ITM signals, and the reason why I chose to do that, it was an executive decision, mainly because um, the past month, maybe, and even last month too, we just had it very rough trying to trade the U.S. session, man. And trading those OTM signals, the ones where you risk 25 to get 20, 35 to get 15, 35 to get 20. It's like there's no reason why getting 80% to 100% kickback is very good, and it's mainly because it's very very hard to get. And Nadex, I think they do a pretty good job of making it hard. If you guys don't know, of course, Nadex has market makers, and with Nadex and their market makers and stuff, a lot of times, in my personal opinion, the prices aren't always as lucrative as I feel they should be. Now, they are the most lucrative, but like for example, in the trades that we used to take, if we wanted to do a 25-20 and we wanted to reach the $25 mark so we can enter in on a trade. Sometimes the trade would have to go extremely close to our strike rate in order just for us to get that just alone. Um, I mean, not extremely close, but extremely far away from our strike rate, just for us to get that. And even since we're doing ITM signals, I can also see that sometimes, like, we have a working order for 75 or for 25, or whatever it may be, and it would literally have to almost reach the actual strike. And it shouldn't be the case, but I can also see too because the hours that we're trading during are quiet hours now. So Nadex doesn't really always give us the most lucrative prices. But yeah, even in that, man, the volatility of the U.S. markets was, kicking our butts. Even though we was relying on volatility, sometimes, and everybody, if you're a trader, you've experienced this, and I talked about this in a couple of my videos. Well, sometimes the markets will slingshot opposite from the news, and it usually and usually it does it for like 30 minutes to 45 minutes, sometimes even an hour. So all the trade expires, I used to put them at 2 hours so that they can have some time and some wiggle room for the trade to catch up. And I remember recently we had one trade, man, the false spike literally lasts for almost 3 hours, dude, 2 to 3 hours. And I think it was like 2 hours, or it was like 3 hours, and we took two trades in that direction. And I remember the moment that our trade finished, the market actually ended up going the way that we was expecting it to. But see, that's kind of why, like with the U.S. session and the news reports and stuff like that, you know, in my opinion, we've tried everything, different strike rates, even ITM signals. It's just kind of untradeable sometimes, especially for day traders, man. And I think there's just way too much manipulation in the markets, and it has to be talked about. One thing that people don't notice is that one of the guys in my group actually mentioned this, and I agree with him. I've been thinking about this for a long time now, but it's mainly the fact that markets are manipulated now to accommodate binary options because binary options has become more popular, and because forex markets don't really make money from binary option traders, they kind of want to get them out of trading binary options. So you'll find that at the end of like those lucrative expiries that everybody choose, like hourly expiries, 15-minute expiries, 30-minute expiries, those kind of stuff like that, you will see that markets do a whole bunch of last second, last minute spikes. Because last year, this all honesty, man, last year, just before the Brexit, I do not recall trading binary options or trading signals and they doing like spikes on like the last 30 seconds to last minute. That just wasn't a fear for me. And if anybody knows, when I used to trade when I first started trading Nadex, all honesty, man, I used to place a trade in and leave it, mainly because the way that it used to be is that if a candle start going a certain way, that's just the way that it's going to go, and that's period. Like it's not going to do all of this crazy movement and all that kind of stuff like that. But you can't do that now. You got to watch that. You got to watch that trade to like the last 30 seconds to the last minute, and it's mainly because they spike in a literally they will spike almost 10 pips. I've watched trades spike literally almost 10 pips in the last couple seconds just to just to break past a resistance, to break past a support, to break past a moving average. It's kind of all of those things that most traders use. The trade makes it, the signal or the pair makes it its duty at the last couple seconds or the last couple minutes to break past those points. And I think that they are doing that, and they're making those markets and manipulating those markets in order to accommodate binary option traders. Because to be honest with you, it's not so bad for forex. If you know where the market is going to go, then you can just leave your trade in for however long you want to until it reaches where you want it to, unless it triggers like a stop loss. But for binary options, when you take into account of you having expiries, then that provides a problem. And if you have an expiry, then that means that at somewhere close to the end of that expiry, it could be in the money the whole time, but somewhere close to the end of that expiry, that trade is going to hit and you're going to suffer from it. So um, that's just something to take note of for those who are binary option traders. Those spiky candles and spiky pairs and stuff like that. Just watch out for it, man, because um, you'll be able to understand and you'll be able to see that that the markets do adjust to who's trading them, and people who manipulate and make the forex markets, they really do it so that they can make all of the money out of it. They don't really have the forex markets out there for everybody else to thrive off of. It's really just for them, really. So they want to kind of make it hard for binary option traders, so that they won't have to, um, so that they can bring them over to their side, the forex side, and whatever it may be. So yeah, push more money in their pockets. But yeah, that's not kind of what I wanted to hit on, but that's kind of like I kind of did want to get that point out there real quick. But yeah, like I said, we're gonna have the free week, um, forex market manipulation, and this is actually it's crazy because this is going to lead into what I'm talking about right now. Now, as you guys see right here, we have I have my chart sub, and it's just a basic MT4 chart. I put some parabolic stars up here so that you guys can probably get the direction of where the chart is going. And let me put another pair right here. We'll just put this Euro USD out here, right? Give me a second. And what I want to talk to you guys about is how to properly choose the time frame to be able to make your decisions off of. Now, if you're like me and you do hourly trades, 1 hour trades, or whatever it may be, then you will be able to understand and you'll be able to see that a lot of times those hourly candles that you could use are very spiky. So now in the past, especially with Nadex, I used to use hourly candles to trade because I would just make a strong prediction based off. I would make a strong prediction on where the very next candle would end up at or where it won't end up at. You see what I'm saying? So this is actually the way I used to trade. Of course, I had indicators and stuff like that to help me out with this. But let's say that I'm looking at this candle right here, this long green candle, and I see, okay, this is doing this. It has some bearish pressure, which means something right here rejected it. This, I don't have anything up here, but it may be some kind of support resistance, whatever it may be. But let's say something right here rejected it, brought it down, which I would just make a generic saying that this candle will probably end up going down the very next hour. So what I would do is I would probably place like a strike right here, place like a strike right here, place like a strike somewhere to where I feel like the signal won't end at, and bam, it'll come in the money and then look like it's deep in the money, basic. So that's just kind of the basic gist of how I, used to place my signals a lot. Now, one thing I want to note, hourly candles never used to look like this, especially when I first started trading. And you notice hourly candles used to kind of have more of a consistent look. I'm trying to find a candle that they used to look like, but it was a much more of a consistent look. Like you knew that it was all the way down or all the way up. You see what I'm saying? With these, you see they have long wicks on the top, long wicks on the bottom. Almost every single candle that you see has long wicks on it. Long wicks right here, long wicks right here, long wicks right here, long wicks right here. Same thing right here, long wicks, which means this trade was right here. It spiked all the way up here and it made it look like it was going up, and then it spiked all the way down past this little bar right here. And see, this is actually a problem. Now, these are normal right here, these little dojis and hammers and all that kind of stuff, because it just shows a market reversal. So if you see something like this, bam, it could just show that the market is about to reverse. But when you see like these little long spikes on each side of the candle, then that means that you need to change your time frame. And the reason why I say that is because you want to use a time frame that has the almost the most smoothest look, so that you can make your decisions off of. You don't want to use a time frame that has very spiky, very inconsistent looks almost. Because when you see stuff like this, it has an uptrend and this a large spike down, and it looked like it's about to start a downtrend, and then it just goes straight back up, and then it spikes straight back down. The idea is that these candles are they're too lucrative, they're too volatile to make decisions off of, and therefore you should use something else. Like even this one right here, you see how it goes spikes all the way down here, and then it shoots all the way back up. And just for those who are beginner traders, when you see this long line, it just means that the market went there. Like that's where the market was previously. So what you want to do is actually you want to take your time frame down a little bit. So let's say I'm going to go here to M30, right? And if you notice, this still has spikes. This still has strong moves and stuff like that. But it's not as bad. It's a little bit more of a consistent look than hourly kind of. Like if you look at hourly, it looks kind of a little bit more messy. But when you look at 30 minutes, and I might have to zoom out more so that you guys get a little bit more realistic look. But yeah, you look at 30 minutes, it's still spiky, but it's not as spiky. Now you'll notice that in the 30-minute candles, this is actually where most of this mess is happening at. If you look right here, look at this, just in 30 minutes, this market right here, right? It spiked all the way up. It spiked all the way down, bam, spiked all the way up, bam, and then it came spiked down too as well. And then it did the very next thing, the next candle. You can't make decisions off of stuff like this. It's just way too volatile, too much movement. You really want something that's very smooth, that looks very similar to Heikin Action candles. So also what you want to do is just take it down the frame. Bam. Now right here, if you were to look, you will notice that these markets look a little bit more consistent. And look at the parabolic SAR. You see this one right here. It lasts for actually for a while, which means that in a 15-minute chart, you're getting a little bit more consistent look of an actual downtrend. You see right here in this 15-minute chart, you get a little bit more consistent look of an uptrend, and right here again, you get a little bit more consistent look of a downtrend. If you go back up for the 30-minute and hourly charts, you couldn't really see it that well. It's very spiky, very ups and downsy. I know it's a word I made up, I guess. And this one right here, very spiky. So you don't really know what things look like. But if you go back to the 15-minute trend, bam, you can see how it looks a little bit more consistent, a little bit more cleaner. Now, let's go ahead and take it down another notch. Now, I wouldn't recommend using 1-minute candles, even though some people have done that. I actually done it in the past when I used to do 15-minute expiries for binary options, but I don't do that no more. It was just way too spiky at the time. So let's say you go down to 5-minute candles. These 5-minute candles, and it looks a little spiky, but you have a little bit more consistent look on the trend as well. Like for example, you see right here, this parabolic SAR stops, and this trend goes on for a little while actually. You see, it just goes down the whole time. If you were to enter in up here as soon as this new dot started in or something like that, and this is not a strategy, I'm just saying if you were to enter in when a new trend started, your trade will be going down for a good amount. Also, too, right here, you can see that even though it spikes down a little bit, it still goes up and it's a complete uptrend. So it does have a slight retracement, but it actually ends up going back up the way it's supposed to go. And because these are small time frames, a whole bunch of candles can cover like one time frame in itself. So 12 of these candles would just equal up to an hour. So that's kind of the point that I'm making. It's just like when you make these decisions, or when you make your decisions as far as like executing your trades, you want to use the most quietest and most lucrative time frame that you possibly can. And you'll notice with these 5-minute candles, even though they have wicks and stuff like that on the bottom and on the top, they still consistently go somewhere. It's not like one candle is just randomly spiking in the opposite direction, and then the next candle is randomly spiking in the opposite direction as well. You can see a sense of smoothness when it comes to the signals, and you can see a bit of consistency as well. Now, another thing I wanted to talk about too as well, which could be very useful for traders. Man, I was watching a couple videos, just kind of upping my knowledge like I usually do, because I've been trading for a while now, but I never come to the place where I feel like I'm complacent in what I've learned. You know, I can teach people things, of course, but I still feel that still need to learn stuff, you know, because I am a human being. I don't know everything. And if I did know everything, of course, everybody that followed me will probably be rich by now. But, you know, that's not the case. But that is my aim, though, to kind of get people financially stable and get them into a place to where wealth is pretty normal and easy for them. But, you know, when it comes to trading, you'll notice that in whatever time frame or whatever time you trade in, you'll notice that you want to stick within the pip boundaries and the pip range. And what I mean by that is almost every single signal that every single hour that you trade, time frame that you trade, you'll notice that there is an average pip movement for those time frames. Like for example, on a daily scale, one pair may move 50, 40, 50 pips. You see what I'm saying? But if you were to break it down on an hour, it may only move like 10 pips an hour, or just 10 pips in that hour. Now, what some people probably have done, they probably take the day scale and they'll average it down and crunch it down into the most volatile and lucrative hours, which means that if they're trading during the US session, I'm sorry, and they see that the trade had moved 40 pips or something like that on for that day, or usually move 40 pips for that day, they could just break it down and say, okay, most of the pip movement probably happened through these hours. So I'm banking that each hour during the U.S. session that a pair won't move but 15 pips or 10 pips, whatever it may be. So the point that I'm making is that when you choose your signals and your strike rates, you want to put them almost just outside of the average pip range. And actually, you know, I found a website and I ran across this website because I saw someone else using it. And I was like, oh man, this is so powerful. I've been looking for something like this for a long time. I found a website where you can actually do that. And I'm actually going to show it to you guys. So this is the website right here. It's called mataf.net. It's mataf.net, and I may put the link in the description so that you guys can use. Um, but you guys see right here, it's just a Forex volatility tool, and you can change it to use however many calendar days you want to. So if you want to do 2 weeks, 3 months, 2 months, whatever it be. So let's right here, I'm going to put 2 weeks, and I'm going to press refresh. Now also up here, what you guys will see, I have excluded only the pairs that I don't want to use, and I included the pairs that I do want to use. So any pair I didn't want to use, I just clicked it and it just popped it off of my list. And these are mostly the pairs that I trade and look at. So I'm going to show you guys exactly what I'm talking about. So let's say I have the Euro USD pulled up, right? And I want to look. Let's say I have the. I'm sorry. You include these. Yeah, exclude these. Sorry. But yeah, let's say I have the Euro USD pulled up, right? And I want to see, well, how much movement will the Euro USD averagely give me in for this hour? All you have to do is click on that pair, and you look. The hour that you're trading will be highlighted, and you look right here. It says on average at 11 GMT, because it's in GMT time. It says on average within this hour, this pair will only move 10 pips. 10 pips on average. That's how much it'll move in this hour, 10 pips. So you can also look down here too, and this will give you the per day. And you can also see which days of the week that you want to trade. And if you're doing ITM signals like things that I'm doing, you want to choose the least volatile days. So right here for the Euro USD, just for this pair, you'll see that it's Monday, and it's kind of even on Tuesday and Wednesday. And then on Thursday, it's the least volatility, which means it's the slowest on this day. And then you'll see on Friday when it's the most volatility, which means it's going crazy. On this day, it moves literally 88 pips, and that's a lot. The day before it, it only moves 65 pips. So you guys can kind of see like the big difference. That's a little bit more than 20 pips more over just one day, So yeah, like I was saying, was you guys can kind of get an average of how it's going to move for that hour. And all you want to do is kind of highlight it. You see right there, it says 10.1 pips. And bam, you want to open up your charts. And then you want to see right here. You will see, and I'm going to pull this up. But you will see it's 7:53 right now, right? Let's see where this candle started at. The candle started at 0786. And of course, MT4 charts is off a little bit, so I'm just saying hypothetically. But it started at 0.0786, and let's see what it reached up to. It reached up to 0.0793, and then it also reached down to 0.070784. Now, if you were to count the candle collectively, that actually equals out to 10 pips when you count the whole candle in itself, the market movement. But the way that I usually take it as it's going to move 10 pips, or it's going to move a certain amount of pips in one direction. And the reason why I take it that way is because it can kind of give you a better choice on a strike that you want to choose. So I'm going to tell you guys straight up. Let's say, for example, you use your indicators and you feel like the market is going to go a certain way on this hourly candle, and you use this as an ATO strategy. What you want to do is you want to put your strike or your entry at such a point that that trade would exhaust itself. So if it moves on average 10 pips during this hour, you want to probably put it 10 pips up here if you feel that it's going to go down. If you feel that it's going to go up, or you feel like it's going to reach and go up, you want to put it probably 10 pips down here. If you were to take it on a smaller hour, on a smaller candle, smaller time frame, you'll be able to get a better look on the strike rate and stuff like that you want to choose. But the point that I'm making is that you want to put it in such a place that the trade won't exceed that point. And this is for binary options. Now, lucky for us, if you're a Nadex trader, you're able to put the trade or the entry at such a point that it won't reach, and it doesn't have to reach that point. So let's say right here, if it goes up to 0793 and I enter in for $75 risk, $25 profit, I can actually end up putting my strikes 10 pips away at 0.0796, and it actually never reaches that point. Now my Nadex strike will be entered up here, and I'll be in the trade. And if it goes below that point and finishes below that point, I have my $25 profit, and we just move on to the next trade. So for those who are kind of looking for help to kind of aid their trading system, and also to kind of manage and get a good viewpoint on volatility, I would say that this is very, very useful. Also, too, this has helped me out because I've been using this the past week. And if you're in my group, you'll notice that I've been doing a lot of fence trades. Well, this volatility indicator has kind of given me the means that I can do some fence trades, and it's mainly because I can be able to get a really good gauge on where the market won't go for that time frame, for that small time frame. So thank you guys for watching. Hope you guys enjoy. Also, don't forget next week is a free week. So if you want to join, I'm going to put my link, my Facebook page link in the description. All you have to do is go to the page, add me as a friend, and message me. Make sure you message me and ask me on how to join the group, and I'll let you into the group. Now, one thing I don't get, for some reason, people don't pay attention to my videos because people literally post on my wall and ask me how do they join. What I'm saying is, don't do that. Just add me as a friend and message me. I don't really, check my timeline so much like that because I get tons of notifications and stuff like that. So, also too, if you have a whole bunch of questions and stuff like that, just try to keep it on the low because some people want to have like I don't mind talking to people. I have conversations with people all throughout the day, but also too like I have a girlfriend and I try to do other stuff and stuff like that throughout my day, and a lot of times people they want to have like conversations with me about trading. Now I don't mind having conversations, but when it's like prolonged conversations about like the signals group and asking like 10 or 15 questions, it's just at the time it's too much for me, especially when there's a bunch of people messaging me throughout the day. I get a tons of messages throughout the day, even though some people don't join the group. They just ask me questions, talk to me, and all that kind of stuff like that. Now, if you want to talk about the Lord, we talk about scripture and all that stuff, I'm perfectly fine with that. It's no issue. It's just that I don't want to be having full blown conversations with everybody I come in contact with about trading. Usually, what I tell people is all of them, almost all of my education is found on my YouTube channels, and then also too, if you want to join the group, I can pop you in the group, and you can read the description and get all of the details and stuff like that there. The things that I do let you know is the times that we trade and the platforms that you'll be using, which is namely Facebook and Telegram. But thank you guys. Hope you guys enjoy the video, and I hope you guys have a nice and wonderful day. Stay blessed.